The U.S. economy, according to data just coming in a few minutes ago, this is breaking news. The U.S. economy added 135,000 private sector jobs in September. That's the figure, much lower, sharply lower than what economists had predicted, 152,000. The numbers in a few minutes ago is 135,000. According to MarketWatch, the manufacturing sector in the U.S. employment barely rose in the month of September. The highest figure came in from the healthcare sector. This is not good as we speak, and this, of course, will impact Wall Street today. Of course, we're getting into the third quarter earnings season on Wall Street, but the Europeans have their own worries to worry about. So European stocks also, as you heard earlier, slid today after this unexpectedly weak U.S. manufacturing data showing that the U.S. is also being knocked by the trade war with its arch rival, Beijing, China to be more precise. The numbers for the Chinese economy wasn't looking good. Now the U.S. is also reporting a lower than expected ADP numbers, what they call unemployment or jobs data this Wednesday. Let's talk to Chelsea Dulany, my colleague at the Frankfurt Stock Exchange. She works for DWTV on behalf of Channels Television. She's reporting to us from their studios. Thank you, Chelsea. This is talking about the state of the global economy. The U.S. numbers is out there, but of course, Germany, the biggest economy in Europe and among the G7 and the G20, they've slashed their forecast for economic growth. That's a group of German think tanks. What is in this number for this year and next? And should investors be worried about the slowdown of the German machine?
It's certainly a grim day for markets and investors everywhere, really. So here in Germany, this group of think tanks released their latest estimate for German growth, and it's a lot lower than they had forecast earlier this year. So now they're expecting the German economy to grow 0.5% this year, and if you look at the forecast a year ago, they were forecasting 1.9%. So that's a really sharp slowdown for growth, and they've also cut their forecast for next year. And it's sort of they're responding to the same things that are impacting the U.S. economy, the Chinese economy. We're talking really about trade tensions, which is having a big impact on Germany's manufacturing sector. Germany is a very export-dependent economy, and so some of the automakers, some of these big industrial firms are just having a really hard time selling their products abroad right now. At the same time, there's a lot of concern over Brexit here as well. There was a forecast out today as well saying that, if Brexit happens, German economic growth would be 0.4 percentage points lower. So when we're already at such a low level, that's really concerning. So it's sort of adding to this mood of fear, really, in global markets today. So we have the DAX down. It's about 1.3% right now, and all of these investors are really reacting to trade tensions, to lower growth, to Brexit.
Yes, but again, the German finance minister, Olaf Scholz, says that Germany is well prepared, well kitted for the potential economic crisis. Where is this confidence coming from? Any idea the underbelly of the German economy here that this government official is talking about?
Yes, so Mr. Scholz he's been out this morning and he's saying, we're not at this point expecting a sharp, prolonged crisis here in Germany. So Germany is expected to be in a technical recession right now. The economy contracted in the second quarter of this year. It's expected to contract in the third quarter as well. So technically it's in a recession, but at the same time, they still are projecting growth. So they're expecting growth around 1% for next year. We're still expected to eke out a little bit of growth this year. So they're not really expecting at this point, the sort of economic crash of the financial crisis or things like that. At the same time, they are preparing just to act if they need to. So Mr. Scholz, the finance minister here, has said We have at our disposal around 50 billion euros worth of policies that we could sort of unleash on the economy if we do need to combat a slowdown. And Germany is also under a huge amount of pressure right now from not just companies here, but also the European Central Bank, economists. Really globally, it's facing a lot of calls to spend more money to prop up the economy. Germany's typically really abided by this policy of the black zero. They don't like to go into debt, and they're really getting a lot of pressure to be more fiscally open. And so at this point, Germany's saying, you know, we don't expect to have to do that, but we're on the lookout. And if the economy does slow further, if these trade tensions, if the China slowdown, if all of that really does have a bigger impact on the economy than we expect, then we are, you know, ready to act.
Yes, Chelsea, quite a lot of head scratching for policymakers, central bankers around the world, as we know it. Thank you so much, Chelsea Delany. Let's leave it there for today. Let's get a lot more in our arsenal and continue the conversation from here tomorrow. Thank you from Frankfurt studios of DW TV for Channels Television.